Good evening and a warm welcome to Personal Finance. I'm Gugulethu, Cele. Retrenchments and job losses are a stark reality that many South Africans have been forced to face. And in such tough economic times, it is imperative that those who are employed prepare for this potential reality by choosing the correct income protection cover. To talk us through this theme of preparing financially for potential job loss, I'm joined in studio by Nitesh Patel, Head of Customer Financial Solutions for Personal Banking at Standard Bank. So good to have you with us today, Nitesh. It's a dreary topic that people often tend to avoid, but I'm sure there are significant considerations that need to be taken into account. So for anyone who actually has a full-time job, a luxury that it is actually considered to be in South Africa, I take it getting some kind of income protection is should be high on the agenda.
Absolutely. I think preparing for a job loss should be part of your overall financial plan. And you should start that financial plan when you start earning a living for the first time. But it's never too late to start that financial plan. So you should start as soon as possible and start immediately if you haven't started yet.
How do we do it though, Nitesh? Because for people in their 20s who enter the work environment, you tell yourself, gosh, I've got what, 40 more years to work. I'm young, I'm educated. You know, I won't be without a job. How do you actually sit down and get into that mindset of preparing effectively, as you say, with that financial plan, which entails potential job losses?
Yeah, so one of the components of your financial plan should be providing for emergencies or unforeseen circumstances. And a job loss certainly falls into the category of an unforeseen circumstance. So how do you go about doing it? You should consider three factors when in your financial plan. The first one is around saving. You should be cutting back on any unnecessary expenses and creating an emergency buffer or fund. That fund should consist of about 3 to 6 months of income, and that gives you a good safety net and some peace of mind. The second component is around insurance, and there are various policies available on the market today which you can take out which give you cover for illness, injury or retrenchment. When you take out certain kinds of debt as well, even short-term debt, they would offer you credit insurance, and some of these credit insurance products would also offer you some form of retrenchment cover to cover the installments for a defined period of time. And then the last piece is always debt, and the fact that you should be minimizing and reducing your expensive short-term debt as quickly as possible. And by expensive, I mean debt with a higher interest rate.
Having said that, I take it goes back to what, that initial meeting with a certified financial planner, someone who is able to guide you and give you advice that you choose the appropriate cover, because you alluded to quite a few that deal either with your debt or that deal with retrenchment and credit as well. So it really sits down with the consumer identifying what kind of income protection cover they actually need. Yes,
so you should always consult a certified financial planner. You should talk to your bank and your family involved in this. In any discussion around your financial plan, your family must be involved, especially when you're preparing for planning around a job loss.
You say speaking to a bank, and you represent such a financial institution. What kind of questions should I be asking my bank about? Maybe to cover my, expenses that you might have with a bank, your debit orders, or is this just the necessary cover that maybe a bank might be able to provide, which has a full income protection product available to your needs?
So I think where the bank would be able to help you is, one, if you broke it down into those components I spoke about around savings, insurance and debt, the bank would certainly be able to help you around savings products and what kind of saving and investment products are available. Most financial institutions today have an insurance arm to their business, so they would be able to refer you to a certified financial planner who would help you with the insurance cover of that piece. And around debt, they would be able to help you understand, if you were in this position, would you be able to restructure your debt? Which piece of your debt would you be able to restructure, and how would you be able to restructure it going forward? So if you were faced with an actual job loss, and you are unable to meet your financial commitments in terms of your bond or your car or your credit card, you have to understand from the bank, would they be prepared to restructure this debt? Over what period would they be prepared to restructure it? It's better to talk to them sooner rather than later and fail to meet a payment.
I take it, as you say, this is an important conversation to have before the potential retrenchment takes place. But let's deal with a scenario where you've lost your job. Your company has given you whatever payout that they have. Where does one start? Back to that conversation with your bank to say, look, this is the situation. In the next 3 months, I'm not too sure if I'll have another job to be able to pay off my bond, my car, and other expenses that I might have.
I think this preparation starts when you actually receive the first letter around your retrenchment or possible retrenchment. It's at that point where people become flustered and the situation becomes intense. It's best to start documenting and taking evaluation of all of your financial matters immediately. So the first thing to do is to document all of your expenses into this financial plan that you have. Understand from your employer how much of retrenchment cover do you have, how much will you get paid out, and understand how that amount is made up, and get as much detail to make sure that all of what you're entitled to gets paid out, like leave and any other benefits that you're entitled to, that those get paid out to you upon retrenchment. Once you understand what's going to be paid out to you from a retrenchment benefit perspective, you should also talk to the pension fund to understand how much pension you'll be paid out and what will happen to that pension money. And that's where consultation with a financial planner becomes very important. You should also evaluate your budget in line with the changed circumstances and talk to your family immediately. It's up to you and your family to go through the process of understanding what is the bare minimum you require to get by with in your home and to manage your home with. Anything else should be cut out, and the family has to agree to that together. If everyone buys in within the family, you can get through this with less stress and less pain.
That's true, and that's a very important but a nerve-wracking conversation to have, I take it, for many people who find themselves in that situation. But Nitesh, I know you're not an expert on the overall landscape when it comes to income protection or salary cover, but I understand that the average payments don't necessarily equal 100% of the salary that you're used to getting. So for example, if I'm used to getting a salary of 10,000 Rand, with income protection you probably get what, 7,500, and like you say, you'd need to reevaluate where this particular money will go to.
Yeah, I think when you talk to your financial planner, you have to consider things like what do I need to run my home on as a minimum, how much of debt do I have, and how much of savings do I have accumulated. Those factors together would give you an indication of how much cover you would require. So there are certain products, and these products are capped to a large extent on the amount of cover that they would offer you. And each person's cover and the amount of payout is dependent on each person's unique risk profile.
And I take it also the term, which with regard to how often you'd actually receive this payment for, varies again according to the product that you've purchased.
It is. In general, we speak about 6 months payments. So if you consider normal retrenchment cover, they would cover the income you're supposed to receive based on the cover. They would cover that for a period of 6 months. And most credit-related products that do cover retrenchment would also pay they would pay the installment on the product up to 6 months.
I know this is a very sticky question that I'm going to ask you, but we can sidestep it if you want to. But is it ever ideal for a consumer out there to cancel their product offering? Maybe someone who finds themselves in a comfortable situation, they've been in the job for quite a while, their company seems to be doing well, and they have absolutely no threat to their job, and they think that they'll be there for the next couple of years and want to take that money that they're contributing to some kind of income protection and use it elsewhere. Is it ever a good idea to cancel it?
I think it's never advisable to cancel any kind of cover without consulting your planner. But if you consider the current economic environment and what's happened in the economic environment over the past 2 to 3 years, you understand that the risk of job losses is high in the current economic environment. And that decision to cancel that policy must be taken with much care and with much consideration, and you should talk to a certified planner around that.
Let's get into hopefully picking ourselves up now and finding your next job. Obviously that's going to be a challenge because, as you've said, you've had to relook your budget, but I take it then consumers who find themselves in that situation must actively pursue an alternative source of income generation or finding another permanent job if that's hopefully something that they can look forward to.
Yeah, I think the first thing you have to consider is that you'll receive 2 kinds of payouts. The one would be your retrenchment payout and the second one would be your pension payout. Most people run the risk of taking their pension payout and spending it. They see it as a windfall. and that's not advisable. Once you take your pension payout and try to use it to live a little, there are tax implications to that decision that you make, and you must take that decision with caution because it's dangerous. Also, that money is money that you've saved towards a pension, and if you've saved up for 5 years and you use that money now, all it means is that you're delaying your pension and your retirement by 5 years. So you have to take into account those factors of how much money you'll receive, and then in searching for a new job, I think you can turn a negative situation into a positive one. So if you've scaled back and you've cut back on unnecessary expenses, you should continue the habit when you go into a new job. That saving that you've gained from cutting back on unnecessary expenses, put away to continue growing your emergency fund.
Just to sidestep, is it ever advisable to have additional savings which might boost your income protection cover that you might receive, like opening a tax-free savings account and maybe plowing into that if need be, just to augment whatever income that you won't be getting because you no longer have a form of employment?
Yeah, you should always try to have both, so it's not one or the other. You should always be having a savings fund in place or an emergency fund in place, and you should augment that with insurance cover.
Well, let's get the key takeaway points from tonight's discussion. Nitesh, just to close off with, the key considerations that consumers need to remember when it comes to financially preparing for potential job loss.
It's never an easy process when you have to go through a job loss or retrenchment, but knowing that you have a proper financial plan in place will aid with some of that anxiety. So the key takeout for me would be that you have a financial plan in place, you prepare well ahead, and you document all of your plans in detail in consultation with a financial planner.
Well, we'll leave it on that note. Thank you so much for your time today, Nitesh. That's it for Personal Finance tonight. A big thank you once more to Nitesh Patel, who's the Head of Customer Financial Solutions for Personal Banking at Standard Bank. Remember that we'd love to hear from you, so you can tweet any of your comments and suggestions to @CNBC Africa using the hashtag Finance410 or to myself @Gugulethu on Twitter. Until next time, it's goodbye for now.